And finally, for chapter 15 or chapter 1, depending on which book you're using, we're going to look at the financial statements for a manufacturing business because they're a little bit different. Okay? Just a little bit different. So we need to look at the balance sheet and the income statement. They're a little bit more complex. They have more information. So let's start with the balance sheet first. So on a balance sheet, the biggest difference is my inventory. In financial accounting, or what I should say, in a service industry or a resale industry, I only have inventory to sell. But in a manufacturing, I have 3 different inventories. Materials inventory, which is also called raw materials. So this is product. This would be the wood and the strings that I buy before I make the product. Then I have something called my work in process inventory, also known as WIP, W-I-P. And then I have what we call finished goods inventory, or FG. So I'll have 3 individual inventory accounts on a balance sheet. And here's an example. This is an example of a regular balance sheet for a merchandising company. Here's what the manufacturing company looks like. So notice I have 3 different ones, and they're going to be totaled. And we'll learn about them in future chapters. Now let's look at the income statement. So the income statement is a little bit different from a manufacturing to a merchandising business. And here is what I want you to look at. Here's what you would have learned in Accounting 1A or Financial Accounting. My sales, and then plus my beginning, plus my purchases, equals everything I have to sell, minus what's left in inventory tells me my cost of goods sold. But over here in manufacturing or managerial accounting, I have something called cost of goods manufactured. So this is the cost of the products that I'm actually making. So it's a little bit different than this one over here. So my income statement is different. My balance sheet is different. My income statement. And so just to explain this a little bit better and detailed, on the income statement, I'm sorry, this is for the merchandising business. This is for the merchandising. Let's look at this one. This is for the manufacturing business. So my beginning finished goods inventory plus the cost of whatever I made in that period equals the cost of finished goods. Now, finished goods are things I can sell. And then the cost of goods sold is the cost of my finished goods minus what's still on my shelf equals the cost of goods sold. So this cost of goods manufactured is new. In actuality, we're going to have a statement that shows statement of cost of goods manufactured. And here I'm going to show it to you, and you're going to actually have to do this as homework. So here's what it looks like. So I start with my different inventories. So I start with my beginning WIP. That's my work in process. So this is how much is in my WIP account. Here's all the direct materials. So what happens in real life is I start with raw materials, then I have WIP, and then I have finished goods. As I pull from my materials, I pull them into WIP. So my direct materials is my beginning that I already had, plus materials I bought, add them together, minus what's left on the shelf is the cost of the direct materials that went into the WIP account. Then I'm going to bring direct labor in. This is what I pay my employees. And then I'm going to be factory overhead, because these are my 3 costs: materials, labor, and factory overhead. I'm going to add these together, and these are my manufacturing costs that have occurred in this period. This was my beginning manufacture. Add in what I bring, and this is my total manufacturing cost. Then I'm going to back out what's still in WIP. And this is the amount, cost of goods manufactured, that actually moves over to my actual finished goods. And so when you're doing a cost of goods manufacturing, you do it in 3 different steps. And I'm not going to elaborate. Let me just bring up the screens for you guys. Here's kind of what it looks like. So here's my cost of goods manufactured. And so there's my WIP beginning. Here's all my direct materials, my direct labor, my factory overhead. Add them together. subtract out my ending WIP, and there's the cost of goods. So I take this number and I plug it in up here. So you have to do this before you can do this. And if I really want to confuse you, the very last chart is a wonderful little flow chart that looks like this. How things go, okay? Actually, I only have 2 more slides. I'll quickly. So here is the data for our Legends guitar. And I'm going to take this data and I'm going to plug it into here. This is the cost of materials used in production, manufacturing costs, and cost of goods manufactured. So that concludes chapter 1 or 15, depending on which edition book you're using, lecture videos. Thank you.